China is quietly preparing to dethrone the US dollar as the world's reserve currency, and when that happens, it could crush your savings, spike prices, and completely rewrite the rules of global trade. This isn't speculation or a distant theory. It is a carefully orchestrated strategy unfolding right now behind closed doors, while the world continues its daily routines, oblivious to the silent battle being waged over the very currency you use every day. Every dollar you spend, every price tag you glance at, every transaction online is a part of this invisible war, and the consequences will ripple into every aspect of life, from your morning coffee to your retirement savings. The stakes are enormous, and the players are the two most powerful economies in human history, locked in a contest not fought with tanks, bombs, or jets, but with money, influence, patience, and timing. To understand the full scope of what is happening, we need to look at the delicate dance of global finance, the moves being made in secret, and the possible consequences for ordinary people. For decades, the US dollar has enjoyed a near untouchable position at the center of the global financial system. It is not just a currency, it is a symbol of power, trust, and stability. Nations around the world rely on the dollar for international trade, for foreign reserves, and for pricing commodities. This dominance gives the United States an extraordinary advantage, the ability to borrow, spend, and influence global markets with relative ease. Other countries' economies, their trade agreements, and their savings often depend on the dollar maintaining its value. But power like this is never permanent. Every empire, every dominant system eventually faces a challenger, and today, that challenger is China. Over the last few decades, China has transformed itself from a regional economy into a global financial powerhouse, leveraging trade, manufacturing, and long-term strategic investments to accumulate enormous wealth and influence. Its rise is methodical, patient, and deliberate, and it has quietly positioned itself as the only nation capable of challenging the supremacy of the dollar. The moves China is making are subtle, strategic, and almost invisible to the average observer. On the surface, the country continues to purchase U.S. Treasury bonds, maintaining the appearance of loyalty and stability. But underneath, there is a carefully calculated diversification of reserves into gold, other major currencies, and even emerging assets like cryptocurrencies. Every ounce of gold purchased, every euro or yen held in reserve, every Yuan settlement negotiated with international partners is part of a long-term plan to reduce dependency on the dollar. The objective is not to start a crisis today, but to slowly, almost imperceptibly, create a parallel system where the yuan becomes a global currency capable of rivaling and eventually replacing the dollar. China's strategy is deliberate, quiet, and highly calculated, built to avoid immediate confrontation while steadily expanding influence. The United States, aware of these moves, has responded with a combination of economic, political, and financial measures designed to maintain confidence in the dollar and deter rapid shifts in global currency patterns. Federal Reserve policies, interest rate adjustments, tariffs, and strategic sanctions are all part of a larger effort to protect the dollar's dominance. Yet every action is met with calculated responses from China, which studies, anticipates, and adapts to these moves. This high-stakes, shadowy chess game between two superpowers is being played out quietly in boardrooms, government offices, and financial markets, far away from public view. The consequences are not hypothetical. Small shifts in confidence, subtle moves in international trade, and quiet reallocations of reserves can ripple through markets, affecting inflation, investment returns, and even the prices consumers pay at checkout counters. For ordinary people, the potential consequences of this currency war are profound. If China succeeds in weakening the dollar's dominance, we could see inflation accelerate rapidly, eroding the purchasing power of everyday income. Stock markets could experience extreme volatility as investors attempt to hedge against the risk of a dollar that no longer dominates global trade. International transactions might fluctuate unpredictably, impacting travel, e-commerce, and global business agreements. In short, the stability that many of us take for granted in our financial systems could be disrupted, and the changes could happen faster than most people anticipate. This isn't a theoretical threat. It is a very real possibility that could unfold quietly, leaving the public scrambling to react after the fact. What makes this scenario particularly dangerous is its subtlety. China's moves are not reckless or overt. They are designed to operate below the radar, to avoid triggering immediate panic while simultaneously reshaping the global financial order. Rather than dumping U.S. debt and causing a market crash, China reallocates gradually, increasing gold holdings, diversifying currencies, and expanding the yuan's role in global trade. It negotiates trade settlements in yuan, builds infrastructure and trade networks that reduce reliance on the dollar, and leverages its massive foreign reserves to influence markets quietly. Each of these moves on its own seems harmless, but together they form a long-term strategy that could fundamentally alter the balance of global financial power. At the same time, the United States is aware that perception is as critical as actual market dominance. Confidence in the dollar is maintained through policy announcements, rate adjustments, and economic signaling. But perception can only stretch so far. If global trust in the dollar wavers, even slightly, automated trading systems, investor psychology, and geopolitical uncertainty can magnify the effects, creating shocks that ripple faster and more widely than policymakers can manage. The stakes are enormous, and the consequences are potentially far-reaching, affecting not just markets, but everyday lives around the world. Visualizing this, imagine a global chessboard where pieces are represented not by knights or rooks, but by stacks of gold, containers of goods, and digital currency symbols. Each move is deliberate, calculated, and carefully timed. China shifts one piece at a time, expanding influence subtly, while the United States responds with defensive positioning, trying to maintain control of the board. The tension is quiet but palpable. The difference between victory and failure in this game is not just measured in billions of dollars, but in the confidence of entire populations, the stability of economies, and the ability of nations to maintain their influence in a world increasingly less dependent on the US dollar. Beyond finance, the stakes extend into geopolitics. Nations and corporations around the world are watching, evaluating which currency they should trade in, where they should hold their reserves, and which alliances they should favor. Decisions made in Beijing and Washington have cascading effects across continents, influencing trade agreements, military strategies, and political alignments. Even subtle changes in the currency landscape can shift global power dynamics, altering the balance between nations in ways most people never see coming. The currency war is not just a battle of money. It is a battle for influence, sovereignty, and long-term strategic advantage. One of the most shocking aspects that many observers miss is just how patient and calculated these moves are. China is not seeking instant gratification or dramatic market shocks. Its strategy relies on time, consistency, and careful observation of responses. While the US focuses on short-term market stability, China builds for the long term, creating an alternative global financial system capable of rivaling the dollar in decades to come. The genius of this approach is in its invisibility. By the time the shift becomes undeniable, it may be too late for conventional policy tools to restore balance. This makes understanding the patterns, signals, and quiet reallocations essential for anyone who wants to anticipate the changes that could affect their financial security in daily life. From an individual perspective, recognizing the subtle indicators of this currency war can be empowering. Awareness allows people to understand why certain market movements occur, why global prices fluctuate unpredictably, and why seemingly unrelated policy announcements can have immediate personal impact. It is not about panic or speculation. It is about comprehension, observation, and preparedness for a financial landscape that is increasingly interconnected and volatile. Small changes in confidence, subtle shifts in currency allocation, or quiet international agreements can have dramatic, real-world consequences, and those who understand the signs are better positioned to respond. As we look forward, the trajectory is clear. The US dollar faces unprecedented challenges to its status as the world's reserve currency. China's strategy is deliberate, multifaceted, and slow-moving, making it almost imperceptible until the tipping point arrives. Federal Reserve measures, interest rate changes, and fiscal policies are attempts to stabilize perception, but perception alone cannot create true resilience against a coordinated patient challenge. Global confidence in the dollar will be tested, and when cracks begin to appear, the consequences will cascade across markets, economies, and daily life in ways that most people will find hard to anticipate. The war between China and the United States over currency supremacy is ongoing, quiet, and profoundly consequential. It is a conflict fought with gold, bonds, trade networks, and digital currencies rather than bombs, yet its effects could be just as transformative, just as disruptive, and just as world-changing. Every person with a bank account, every business that trades internationally, and every government that relies on global reserves is affected, whether they realize it or not. The stakes are not abstract. They are concrete, real, and imminent. Understanding this silent battle is crucial. Recognizing the moves, the strategies, and the subtle shifts allows for insight into how global finance is evolving, who holds influence, and what may be coming next. This is not about giving financial advice or predicting the future with certainty. It is about awareness, observation, and comprehension of a global system that is quietly being restructured in front of our eyes. The war is ongoing, and the patterns are there for those willing to see them. In the coming years, the tension between maintaining dollar dominance and rising Yuan influence will continue to shape global trade, investment flows, and the relative stability of economies around the world. This is a story of patience, strategy, and quiet maneuvering at the highest levels of power. Yet it impacts the lives of everyone. Understanding these movements, observing the subtle reallocations, and recognizing the patterns gives context to the headlines, the market fluctuations, and the policy announcements that can otherwise seem random or disconnected. And while the outcome remains uncertain, one fact is undeniable. The global financial order is being challenged, and the consequences will touch every individual, business, and nation. The war is not fought with weapons. It is fought with money, influence, and strategic patience, and it is happening quietly everywhere, all at once. Observing, understanding, and following these moves is the first step toward grasping the scale and stakes of a battle that will define the next era of global economics. In our next exploration, we will examine how digital currencies, blockchain technology, and emerging financial systems could accelerate this global shift, potentially redefining what it means to have a world reserve currency. The game is far from over, and the next moves may come faster than anyone expects. Until then, the war continues quietly, silently, and with consequences that will reach all of us.